Welcome to this edition of IBFD Tech News and Views, bringing you the week's tax news in a nutshell. I'm Smedenice, Tax Technical Coordinator at IBFD, and with me for Beyond the News interview Stuart Gibson, IBFD's Chief Editor Global News in Washington, D.C. On today's show, the US opens the bidding on Pillar 2 global minimum tax at 15%. More jurisdictions explore digital service taxes, and the EU plans to develop a third anti-tax avoidance directive. These and more, including Stuart Gibson's interview with Rasheed Khan, Managing Director at Taina Technology, coming up on IBFD's Tax Takes. First, we turn to the top news of the past week as reported in IBFD's Tax News Service. The US has opened a bidding at 15% in the negotiations to set a global minimum tax rate under Pillar 2. The bid marks a sharp departure from the 21% GILTI rate that President Biden proposed in his tax reform and infrastructure package. Expect the bidding to increase, however, as the US Treasury underscored that the 15% rate should be considered as a floor, with negotiations leading to a higher minimum rate. Some European countries, including fellow G20 members Italy, France, and Germany, have welcomed the US proposal, while Ireland and Hungary, with corporate tax rates below 15%, have signaled their disapproval. Even though consensus on Pillars 1 and 2 seems to be within reach, digital service taxes continue to spring up like mushrooms, particularly in the US. New York plans to impose a new 2% tax on annual gross revenues exceeding $5 million on large tech companies in the state that collect data from New York residents. Montana wants to join the party too, shifting the weight of its multi-factor formula apportionment formula to attribute half the weight to sales. This would mostly hit out-of-the-state businesses like digital retailers that do not have a workforce or property in that state. Then, the EU has released its business tax agenda for the 21st century. The agenda features plans for a third anti-tax avoidance directive, an allowance system named DEBRA to promote investment by addressing the debt equity bias, and a single EU corporate tax rulebook with the acronym BFIT that will replace the pending CCCTB proposal and includes, just like that proposal, a formula apportionment and common tax base. The EU expects to release details over the next 2.5 years. The OECD has released a report on how inheritance, estate, and gift taxes could upend wealth inequality and reinforce public finances. The report highlights the high level of wealth concentration in OECD member countries, as well as the unequal distribution of wealth transfers, a factor that further reinforces inequality. The report comes at a time when many jurisdictions are targeting wealthy citizens to raise the money necessary to replenish tax coffers depleted by the pandemic. For instance, the state of Colorado plans to pass its most progressive tax reform in years. Expecting to raise $375 million a year, the state will eliminate and reduce tax benefits for high-income taxpayers, while expanding the tax benefits for low earners. The state of Maine plans to target wealthy taxpayers by imposing a 3% surcharge on income exceeding $200,000. But not all governments have found success in trying to tax the wealthy. Chile's Chamber of Deputies recently rejected a bill that would have imposed a once-only tax on wealth and suspended a number of tax exemptions. The US Department of Justice has charged the largest Swiss insurance company, Swiss Life Holding AG, with conspiring to help US taxpayers fraudulently conceal $1.5 billion from the tax authorities. To resolve the charges and prevent further prosecution, Swiss Life has entered into a deferred prosecution agreement in which they agree to accept responsibility, cooperate with the Justice Department, and pay an $80 million fine. Continuing its efforts to prosecute foreign bankers who help US taxpayers evade their taxes, the United States last week filed charges against 2 Austrian bankers. The indictment charges that they held Brazilian construction conglomerate Odebrecht launder hundreds of millions of dollars in income and pay hundreds of millions more in bribes to officials around the world. If convicted, the bankers could spend decades in prison. And now moving on to other news. In an effort to increase compliance, Hungary has proposed new rules for the taxation of cryptocurrencies. If enacted, owners would pay just 15% on gains, which is less than half of the current rate of 30.5%. The bill would also allow taxpayers to carry losses forward and backward, and deduct the costs of trading. Moving in the opposite direction, Indonesia is considering a tax on cryptocurrency transactions, and Argentina is broadening the scope of its tax on debits and credits on bank accounts to include electronic wallets. In an effort to raise more money to support those in need, invest in regions, and mitigate the environmental impact of mining activities, Chile's Chamber of Deputies has approved a bill that would impose a 3% mining royalty on extractive copper and lithium industries. The bill faces hurdles in the National Senate, however, as both the government and industry consider the law unconstitutional. And finally, the Australian Tax Office recently delivered some bad news for all those Australians who stocked up on toilet paper during the pandemic and were hoping for relief. The cost of toilet paper will not be deductible as a Home Office expense. And now we go beyond the news for Stuart Gibson's interview with Rasheed Khan. Stuart?
Thank you, Esme, for your informative news report. I'm Stuart Gibson, Chief Editor of Global News here at IBFD. Joining me today is Rasheed Khan, Managing Director of Taina Technology Limited, headquartered in London. Rasheed is joining us from his home office in Pennsylvania. Welcome, Rasheed.
Thank you. Thank you for having me.
So good for you to be with us. Before we get started, could you please briefly share a little bit about what Taina Technology does and what you do there?
Yeah, Taina Technologies is a reg tech company that primarily focuses on tax technology. And what we actually do is look at things related to the FATCA regulations, NRA requirements, and common reporting standards in order to identify what are the proper certifications that need to be in place. How we do deliver this is through collecting information through online processes and OCR technology that is deployed in order to validate the tax documentation and provide information back to the institution about the validity of the forms they're collecting.
And so what do you do there?
So I'm actually the subject matter expert. I've actually been doing tax technology or doing tax operations for over 30 years, looking specifically at various regulations, how they're being implemented and deployed, what are the requirements from a financial institution standpoint.
Wow, that's a long history. So over the last 10 or 20 years, we've seen an explosion in something that, and you just used the term tax technology, we do too, and that includes things like hardware, like what governments and taxpayers use to record and report VAT transactions. And it also includes, I have to think there are thousands of software applications, all the way from what I use to prepare tax returns online, all the way to sophisticated ways to submit reports required by FATCA, as you just mentioned, or the Common Reporting Standard. So what does the current landscape of technology look like?
What we've seen is, although it's been a trend from overall standpoint to move things into the cloud, we're now seeing many financial institutions really ramp up and start to migrate from on-premises type of software delivery into cloud-based technology. And one of the biggest hurdles that they've had to get over is client secrecy and how do we protect client information. So from a technology standpoint, with that increase in the cloud, things like our ISO certifications are very important. Being able to deploy online solutions and still be able to protect and secure client information has been very important to us.
So it looks like we're migrating applications to the cloud, and we're trying to put processes in place that assure the security of the data that the taxpayers, mostly companies, are storing in the cloud. Did I get that right?
That's exactly it. The other trend we're seeing is people becoming more and more reliant on, OCR and optical character recognition, and being able to take printed forms and utilizing that information as part of the process is very important.
So where do you see this field heading in the next 1, 5, 10 years? Do you think we're going to see more use of OCR technology, for example?
I do believe so, and not even just on the client onboarding side. We're seeing more and more tax return software, the things like TurboTax and other type of solutions where they're doing their tax filing, also utilize that information. Also utilize the technology for OCR and be able to read the forms that taxpayers are receiving in order to translate that into other forms.
You're talking about things like W-2s and 1099s for us American taxpayers?
That's correct. And even for non-U.S. taxpayers who are filing to get a return of overpayment of tax, it's very important to be able to know and understand what the technology capabilities are.
So where do you see this heading then? We have OCR technology, we're seeing it expand. What other sorts of technology advancements do you see in your field?
So we see a lot more in the digital software type of scenario, type of field, where you're essentially deploying a solution directly into a customer's framework, and it operates independent of the vendor. So, and that it seems to be a very big trend. You used to think about this as being just pure SaaS, but it's really a little bit more than just a SaaS type of solution, in that you don't deploy it and then you're done. You're constantly updating and upgrading and working with that institution in order for that software to operate and to be able to execute the tax process. More and
So,
more financial institutions are outsourcing or trying to replace what the physical tasks, not trying to replace people, but some of the physical tasks that are repetitive and just require the same type of thought process over and over, with solutions that can actually do that. And the more solutions can deploy those type of efficient and effective ways of repeating those tasks, the better it is for the institution.
well, that leads very nicely into our last question. So many people bandy around these terms like artificial intelligence and machine learning. So, what role do you see for these tools? It sounds to me like we're getting there already as we contemplate the future of tax technology. And is there a limit to how far they can go in replacing human input?
Yeah, and it's a great thought. We'd love to say that we can get to the point of all solutions having artificial intelligence, but there are some things that you have to put into a process. When you can use artificial intelligence to read information and to be able to act on certain details, but where it starts to become the driver of policies and procedures around your process is where it starts to get a little bit controversial, just because many lawyers have their frame of mind on how the regulations should be implemented. So it's hard to say to allow for the machine to make those decisions for you. But on the same point, machine learning, we can learn with machine learning, we can develop a lot of metrics, a lot of information about what is repetitive, in order to help drive what policies and procedures we put in place in order to deploy the right solution.
So it sounds to me like right-brained activities may be fertile ground for further use of machine learning, and left-brain activity, I'm sorry, I got it backwards. Right brain activities for humans, and left brain activities perhaps for machine learning. Does
Yep,
that sound about right?
that sounds about right.
And I messed that up. Our guest today has been Rasheed Khan, Managing Director at Taina Technology. in the US office. They're out of London. And I would just want to thank you so much, Rasheed, for your time and for sharing your insights into this very rapidly changing field of tax technology.
Thank you. Thank you for having me.
That wraps up this week's edition of Tax Takes, News and Views, the week's tax news in a nutshell. From Esme Denise and myself, thank you for watching. Here's hoping your week is not too taxing.